Are interested in learning more about the Astana International Financial Center, visit our website and follow us on social media. Welcome to Kazakhstan.
Esteemed guests, dear speakers, dear ladies and gentlemen, good morning, and I believe we are ready to start. I welcome you all at this panel session, Forefront of Finance, Innovation as a Driving Force for Sustainability, that we're having during Astana International Forum 2023. Our panel session brings together industry experts and the regulators to discuss exactly as the title says, the forefront of finance. What is happening in the financial world? Where are we moving? I believe that during pandemic and during this volatility times, Kazakhstan have showed some resilience in terms of economic growth. And of course, pandemic has digitalized the world a lot. And a lot of the financial services becoming more accessible. We have seen growth in many areas like banking, transactional banking. In Kazakhstan, we have seen how capital markets became more accessible. Just to give some numbers, in 2018, for example, during the initial public offering of the equities of Kazatomprom, we had around 3,000 individuals participating. Last December, when it was the IPO of Kazmunaygas, it was over 70,000 Kazakhstanis participating in the IPO. That's a huge, I think, change, right? And it's just one of the examples. Yesterday, during the meeting of the Foreign Investors Council, Minister for Digitalization in Kazakhstan have mentioned how they are digitalizing actually the government services in the country. A lot of the services are now available online, and a lot of the Kazakhstanis, of course, enjoy that. We have actually also almost forgotten what cash is, right? A lot of the transactions are cashless. According to the minister, again, about 82% of the transactions now in Kazakhstan are non-cash. And that compared to 4-5 years ago, I think that was even less than 40%. Again, that's a big, big change. So financial industry landscape is really changing, and innovation is driving it forward. We as an AFC are committed to innovation, and I hope we have been proving that with different cases, projects we have launched so far, because innovation is our DNA. Creating the financial center itself was a huge innovation from the leadership of the country. Just recently we have launched an MTF, first in the region. That also an example of innovation. Of course, a lot of the Kazakhstanis heard about our application of our stock exchange Tabys. And again, which was the tool to participate, one of the tools to participate in IPO. That was granting access for the capital market without actually the hurdle of going through the process of onboarding with the broker. So there is a lot of the change, and I don't want to talk just myself. So we have a panel of distinguished guests, and let me introduce you with them. Kristina Doros, Vice President, Visa. Timur Turlov, Founder and CEO of Freedom Holding Corp. Sopnendu Mohanty, Chief FinTech Officer, the Monetary Authority of Singapore. And Dr. Uzel Njijimana. He is the Minister of Finance and Economic Planning in Rwanda. With further ado, let's start. And my first question is to you, Mr. Mohanty, as the Chief FinTech Officer of MAS, and we all know Singapore is right in forefront of the FinTech, digitalization, digital assets. So we'd like to know how you, as a regulator riding this wave, how does the new technologies and traditional finance, which exists for 100 years, is merging. How is it working in your region in Singapore? What we can learn?
Thank you, Governor. Good morning. You know, in 2015, I'll share a little story. And in 2015, when I got the job as the Chief FinTech Officer, after 18 years with Citibank, I went around the world to figure out what Singapore can do on FinTech. I almost got a feedback. Singapore has no chance when it comes to FinTech. We're a highly banked country. There's no need for FinTech. So I was regretting maybe I made a bad choice to move to be a regulator for nothing. So what we did, and it's just a bit of a, when you look back and kind of set the tone for Asian market. Just to give a context, in 2015, the total FinTech investment in Singapore was practically zero, $20 million. Last year, in fact, 2 years back to back, it is $4 billion annually coming to the FinTech space in Singapore. Now you wonder what happened. The first thing we did is to change the definition of FinTech. Because before 2015, people, when they hear the word FinTech, they think some shadow banking. Somebody is doing something illegal. Somebody is doing a financial services without getting regulated. That's the definition, and mostly restricted to payments and lending. So we decided to expand the definition of FinTech, that whenever technology is used to make financial service better, is a FinTech for us. So why do we care, as long as we regulate them well? So the first thing we did is we created a regulatory framework where we decided that anybody who seems to do an activity that looks like a financial services, we will regulate them. But it was not appropriate to regulate them using existing regulatory framework, which is kind of disproportionate to what they do. So we started a framework called activity-based regulation. That's an Asian phenomenon, where we look at an activity and say, what is the proportionate risk that activity brings, and we regulate for that. That changed how entrepreneurs thought about FinTech. They started looking at a bit of financial services. They got the right regulation, balanced, and then there was a huge jump. Within that definition, we had two kinds of FinTech. There's a FinTech which does financial services, and they got to be regulated. And there is a FinTech who doesn't want to get regulated, but wants to make a lot of money. So how do they do? So they do it by collaborating with the banks, with the regulators, regulated banks. So we call it B2B banks, B2B FinTechs. So there are these two buckets. So in Asian context, the fastest growing FinTechs are those which helps a regulated FI to digitize faster. And if you look at the numbers today, Asia has got 50, when last year, despite the funding crisis, Asia accounted for 40% of global funding, primarily going behind FinTechs, which are helping regulated entities to do digital transformation faster. So that's one thing. Second thing is that Asia also started looking at building foundational digital infrastructure for the countries, which is very critical. And when I say foundational infrastructure, it means four things. You must have a trusted national ID, digital ID. Second, you must have an infrastructure which allows money to be moved in the most efficient way, interoperable payment systems. Third, you must have a trusted data exchange. In the world of fake data and fake information, you've got to have a public infrastructure called trusted data exchange. And the fourth one, you must have a consent mechanism where citizens have an access to their own data and they're empowered to share based on their consent. These are the four foundational infrastructure. If you look at India, Singapore, Thailand, Indonesia, they started building this infrastructure. So now you have a regulated framework which regulates every possible FinTech and which has a two incentive. Either you help the banks to digitize faster, you compete with them. Then you have a national infrastructure which allows you to ride on it. So what happened to the industry in Asia, that the most difficult part of financial sector is make the onboarding seamless, because the KYC process is quite complicated, and 30% of financial sector cost is regulatory cost, which goes to AML monitoring, fraud transaction monitoring, know your customer, those issues, right? If that can come out of the market cost as a public infrastructure, it helps both the regulated industry and the non-regulatory industry to ride on that infrastructure to grow. And that happened in Asia for last 5 years. So we saw a massive growth. Just to close my intervention here, during COVID, It is unprecedented in Asian market. 20 plus new digital bank licenses were issued. Regulators stepped up their activity by creating a new licensing framework and told, compete with the incumbent, here's the new licensing framework. That created bigger competition, which means the existing incumbent bank started spending money on technology. And that money went to fintechs who are helping banks to digitize. It created that virtuous cycle, and that's how Asia took off.
Thank you, Mr. Mahandi. I like your comment about that there are two groups of the startups or founders, right? Because there is a perception that everyone is in the second bucket. Nobody wants to be regulated, but everyone wants to make big money, right?
And for that, you need an activity-based regulation.
Yeah, sure. Next, I would like to ask Timur your question. I mean, you lead one of the organizations who lead fintech, actually the execution projects here in Kazakhstan and Central Asia. You made sure that the mortgages are underwritten very fast, right? And you are, of course, add to the accessibility of the capital markets. So what do you see? What's the behavior, consumer behavior in the region? What will be the most promising avenues for fintech in our region?
I think the most promising in our country is an access to many GovTech technologies. So we have a very well structured government and commercial databases. We have major data privacy law. We have a very clear framework how to deal with all of that. And we have also some, even on open markets, in commercial landscape, we have a lot of big players who have very well structured databases. And that finally helps you to create some magic in terms of collecting and analyzing data, to building this KYC procedures more efficient, to make all necessary paymentability, creditability checks, to better understand the customer profile, also in terms of his wealth and asset structure, to better evaluate any collaterals, to more efficient register mortgages and any kind of collateral, to be honest, to better understand and to be more efficient in insurance, for example. And finally, on the platform of AIFC, we're able to build the very modern style of financial institution with European-like regulation, which allowing us to structure bonds in any way you may structure them in London. You may do the brokerage business and provide an access to the global markets in the same framework like our competitors in developed countries can act. That helps us to be even more efficient maybe than many financial institutions in a very big and developed countries. Many rich countries now are hostages of their legacies. So they started very early. They invested a lot of things to many legacy technologies. I know that there is still big banks in the United States which card payment processing was started in late 80s. And they use the technology, absolutely crazy technology stakes, like using assembler for as a main language to support the card processing vehicle, for example, in this modern world. And we surely started relatively late, but we're using the most modern technology and we're adapting this technology extremely fast because our government is one of the youngest. I hope it is becoming even younger, and it's adapting technology also fast enough. We have a very large, very well educated, very large amount of very well educated people in our government and regulators, in our financial industry too. That also helps this process of innovation. And in the end of the day, the population average age is also going down. So we are on average 29 years old and getting younger and younger, which is also helps much to adopt new technology faster, much faster than we're not inventing, we actually not much inventing, but we adapting a lot of inventings from all over the world. And that's create a real magic in efficiency. Like we calculated in our bank, the mortgage, the issuance process of one mortgage is like $220 per mortgage. So in the United States, it's like 10,000. We do the same with microfinancing of small and medium enterprises on a normal banking platform. So the normal bank with a full license, with the full access to all the infrastructure is much more powerful rather than any financial institution with a limited license. If you may empower your full-scale bank, full stake with full kind of technologies and full kind of integration and full kind of regulation, which is also allowing you to have a cheaper funding at the end of the day, if you may empower them with the most modern technology, that's create also kind of magic. So that's not a big advantage to run some kind of payment institution with a limited license. You still may compete with the big banks if these banks has a very big legacy in technology and you are very, very modern and open-minded. But if you have an open-minded institution with a full banking license, that can create a magic, especially if your government is very open and your customer is extremely ready to adopt any inventions and any innovations in financial sphere. So that's very inspiring, and I think that's already indicated that growth of efficiency in the bank can save a lot of shareholders' money, and it can save a lot of time for our customers. And finally, that definitely helps to win the competition, because the pricing of financial services is not such strong. The speed of your services is a better way. Is a better way to compete rather than to compete on a cost basis. Because if you may do your services extremely fast and not to hurt the quality of compliance, quality of product, quality of security, that helps you to win extremely big stake and extremely big share of the market in a very short period of time. So that's what inspiring us most.
Thank you, Mr. Turlov. And definitely speed is becoming a really important factor. I mean, like, people forgot how, I mean, in the younger generation probably don't know how was the dial-up internet, right? These days, like, you want it instantly, right now, everything, 8K videos, right? And also I agree with you that the legacy or the absence of legacy for us helped to leapfrog through some of the systems. We were just last night discussing with our guests that we never had checkbooks, and there's still countries who actually use that. I mean, we, like in our part of the world, we don't know what a checkbook is, right? With that, but Ms. Dorosh, you represent the pioneer probably of the cashless payment economy and one of the leaders, Visa, right? And you have seen how this space is transforming there, as Timur said, younger companies who want to challenge the Atlants of the world, right? How you rediscovering yourself? What kind of opportunities you see, especially in our region, in Central Asia, for payment services or for any other areas that Visa wants to become a leader or is a leader?
Thank you, Rinat. And indeed, we're saying, you know, we speak so much about fintech and barely people kind of think that Visa indeed was the first fintech in the world. Because when we started, we were first to combine finance and technology at the full scale of it. So when we did the MaxStripe, that was like the wowest innovation in the world, actually. And it's funny to think of it right now when we're doing contactless in each shape and form. And it was very interesting to hear the definition of fintech from Singapore, because in our part of the world, indeed, fintech is being seen as the most advanced, the most competitive part of the financial technology. So with that, it's no need to present Visa that much. I will just share a few facts for those of you who may not know it. So we operate in 200 markets and territories of the world. You know that recently the population of the world has reached 8 billion people, right? Out of these 8 billion people, there are 4 billion Visa credentials issued, which means that actually every second person in the world has with her or him the Visa credential, and it inspires us a lot, and at the same time is a huge, huge responsibility for us. We process 65,000 transactions per second. 65,000. 65,000. 65,000. As we speak, it goes rounds and rounds. And of course, it can only happen because Visa has always been and is now and is looking forward in developing and supporting innovations in payments and technology. That's what we do. And the recent year has been really successful for us because Kazakhstan is really booming in payments and technology. And that's happening for a few reasons. Some of them, Timur just mentioned, really readiness of different sectors of the economy to embrace these technologies, like GovTech, the readiness of the banks to go into, the classical banks and the new banks to go into the innovations and very actively innovate. So all of those, and also, by the way, the regulation, very advanced regulation and the openness of the regulator to look into the issues of payment technologies development to build a foundation for this successful development. They're all, by the way, of AIFC in supporting innovation and technology. All the programs AIFC runs, like supporting fintech, supporting small businesses. It's what, 120 fintechs? Registered now on the AIFC platform. So all of those together, with Visa contribution, helped us to implement some of the, I would say, disruptive technologies or innovations, some of the evolutionary innovations, all of them together really moving the cashless market in Kazakhstan and in Central Asia forward. And as an example to what I'm saying, as a testament to it, look, recent year, we have implemented what we call, let's start with the most kind of disruptive one, Visa B2B Connect. And that's a solution which is non-card. And it's interesting to, and that's to your question, Renat, what Visa doing in terms of the looking differently at the world we are living in, given all the competition we have. So this is the technology built on the distributed ledger solution or stack, technology stack. This is blockchain actually, which we are using to enable cross-border payments for companies doing the international business. And if comparing to the standard way of doing a cross-border payment, which takes, 5 to 7 days, and with a situation when the payer can sometimes don't have a clue what the payment is between each correspondent banks, there is a huge possibility to lose your payment and so on and so forth. So with the B2B Connect, from 24 to 48 hours, and it depends on the country you're sending your money, you will have the payment done with the maximal absolute clarity where a payment is at each and every second of the process, and with a great efficiency of the economical side. So this is a great deal, and it's indeed us being non-card. And that's interesting because as Visa, we are not seeing ourselves as a card company anymore. We're not a card company, we're a technology company because, well, frankly, I don't remember even when I took my card, like the plastical one, when I took it in my hand last time, I don't really remember. And sometimes I have this, I'm stuck sometimes, frankly, when I have to pay with a card for any reason, and it goes like, PIN. It's like PIN. Oh my God, what's that PIN? Because I'm so used to use the Face ID on my phone, I don't even, I kind of barely remember what the PIN is. And another example of the kind of fresh look at what can be done using the advanced technologies is the thing we launched recently with RBK Bank, and I'm proudly saying that it was first worldwide launch, happened in Kazakhstan here. And that's the solution which is called Request to Pay on Visa Direct Rails. And okay, we're all experts in finance industry, we all know that Request to Pay as a process has been here for a while. Yes, it's not the new thing. But combining Request to Pay as an informational part with the immediate payment on your account, that opens up a huge, huge opportunity, because if you look at it, so today we are using it as a C2C, consumer to consumer use case. When I can request eventually IDOS, I can send a request to IDOS asking for a payment for whatever reason. It can be splitting a bill, it can be, paying together for a gift or a colleague or something, and then IDOS go, yeah, I agree to pay, or no, I decline, whatever, and I get either the payment or the response. But think of it as a huge enabler for much larger segment, and that would be micro and small businesses, because this opens up an opportunity to really scale small and micro payments, which are today happening mostly still in cash, right? Or in P2P, which is not really the best ways, let's put it this way, to have these payments transformed into cashless, because it creates all those clear hurdles with the taxation, right? So we don't want that, and we want all the payments to be in a like right spot. So having Visa Business Card as an acceptance point, actually, for the receiving cashless payments for whatever sales the micro entrepreneur does in Instagram or Facebook, that's huge, that's powerful. You actually build acceptance, cashless acceptance, having zero hardware required. And that's huge to further enable payments in Kazakhstan. And one more thing briefly, that's one I like the most probably, that's sending money to each other using just your phone number. And that's big, because in the way we're used to call each other, right, we're not, well, how many of you remember more than maybe 2 phone numbers you use? As an example. Or how many of you remember your card number? Another challenge. I do, though, but I'm professional in distortion, so I know I remember my card number, my PAN, but of course people don't, and they shouldn't. So that's why we have introduced the opportunity to send P2P transfers using just phone number. You just tap the person in your contact book and you send the money, as easy as that. And again, this thing has been in the market for some time, but it has only been possible within the same bank, right? So within the same bank, you could use the P2P transfers on the phone number. But uniting the market and making these payments available regardless of the banks you use, that's first. And second, take it even broader in allowing phone number-based transfers cross-border. Oh, that's a big thing.
Yeah, that's what I wanted to ask. Is that possible? Well, I mean,
it is.
Okay.
It is absolutely possible, and we are now aiding the markets where these transfers are possible, because obviously it's a subject to many complex things like AML, kind of readiness of the market authorities to open up the market for that, but using very smart system of limits and complying to all the cross-border regulation, money transfer regulation, we're able to open new markets. And moreover, what is really new in the market, and we are working on it right now, is the opportunity, as we say, to push money directly to accounts, not just card credential, but also accounts. And that allows us as Visa, as a network, global network, to kind of be a bridge to the many other networks, like account networks, right? And that's powerful.
Thank you, Ms. Dorsch. I mean, like when it becomes actually, yes, possible to transfer money across border, I think that's like a huge thing. Yeah, Ms. You want to?
I like to say, in Asia today, between Singapore, Thailand, India, Malaysia this quarter, people can send money to each other, mobile phone number, already started. So in Singapore, 3 clicks, you just need to know your mobile phone number. It
Please, too much. We want 1 click.
Because you need to put the mobile phone number, money, and that's the purpose. But you don't need to know your bank, which bank they bank with. It can do cross-border today. In fact, Bank for International Settlement has started a project called Project Nexus, which is going to give the international standard for cross-border transfer of money by just using your mobile phone number or your national ID. So this is already happening in many parts of the world, especially Asian market.
Thank you.
And as the irony, it's the regulator who started that.
Yeah, of course, you have to have regulators on board to make it possible. Dear guests, I would like to especially welcome Dr. Njijimana because Rwanda International Financial Center, which is our co-member of World Alliance of Financial Centers. So we share common values of financial connectivity, right? And then, of course, fintech, this new technology, is the enabler of that, I believe. I read that the government of Rwanda has embarked on this challenge that we also have to digitalize 100% of the government services online, available online in next few years, right? So, and there are a lot of more things that you do, and unfortunately in this part of the world we know not much about what's happening in terms of innovation in Africa. But same as for us, you have the same challenge to make financial services accessible to wider population, right? So if you can share of what your experience and what you guys are doing in Rwanda in terms of a fintech and developing, pushing, promoting innovation, please.
Thank you. First of all, I want to thank you and the government of Kazakhstan for inviting us to attend this important forum. So in Rwanda, the fintech development fits well in our long-term vision. Since 2020, the government has been investing heavily in digital infrastructure and the digital system to improve our financial services, but also our financial inclusion. In 2008, the percent of population with access to financial services in Rwanda was about 48%, but due to payment system, mobile money, the other technologies, currently the financial inclusion is above 93%. We conduct a Finscope survey every 5 years, and we have seen the exponential increase in financial inclusion. From 2000, the government has also been promoting the ICT sector in general by providing incentives, but also doing the physical infrastructure and also building capacity among the youth. So currently we have digitalized almost all public services, all services offered to people, all kind of administrative documents are now accessible online. We have completely digitalized our public finance management from central government to local government. Our public procurement is digital. You can participate from Kazakhstan. You can submit your bid, you get notification on the evaluation, you win, you sign a contract electronically, you supply goods or services. So this is operational for the last 3 years or more. But also this is one of our strategies to position Rwanda as a service hub in Africa. So this will lead to our financial center. So now with the payment system is progressing well. We have interoperability between banks, central bank, and the telecom companies. Currently, the percent of transaction done digitally has achieved over 150% of the GDP, and the trend is really is good. So Then the financial center also, which was created around 3 years ago, is also an ecosystem, a way to attract investment to Rwanda, but also not targeting just a small market of Rwanda, but outside Rwanda in the region. So we are trying to play a significant role in promoting the African Continental Free Trade Area, and geographically we are well situated to connect the East African community, the Central African market, and more. So we are happy that we have a good collaboration with the Monetary Authority of Singapore, and jointly we are organizing a FinTech forum, the first of this kind in Africa, in Kigali this month, or from 20th of June. And also we extend our invitation to all interested participants to attend this important forum. Thank you.
Thank you for the invitation, Your Excellency. Mr. Mohanty, we have discussed and agreed, right? And I wasn't the first one who mentioned this on the panel, but the topic that was popular and is still popular in the last few years, that's a blockchain, right? Or distributed ledger. And I don't mean only like cryptocurrencies that probably everyone thought about, but both, right? Backed and unbacked currencies, which means like a CBDC including. How you guys are progressing on that as an MAS? What's your view? I mean, last week's been very interesting
yes,
for the industry of cryptocurrencies. But however, I still believe that CBDC is a huge enabler, right?
Sure.
May compete with the solution that Visa is developing to enhance the cross-border transactions, but still, like, what's your view on that?
Sure. You know, we've got to step back and understand what is the genesis of cryptocurrencies. If you look at Satoshi's paper, it says peer-to-peer transfer. The promise of crypto was we can move money seamlessly without a bank at zero cost. But the reality is that people are holding the coin hoping the price will go 100 times every day. It's becoming a speculative currency, and they did not solve, let me be very clear, they did not solve the promise based on Satoshi's paper. They're going to solve a payment problem, which is not true. We know that. But they also almost accidentally created a technology which is interesting. And why it is interesting? Because today in existing financial infrastructure, we have a problem. It's called T+3. Every time I want to buy something, the act of paying and act of ownership is T+3. And this is, in the modern day, not acceptable. One of the ways to solve it is to look at this technology. Can we create a piece of software called smart contract, which allows you to embed money and ownership into a piece of software and let it run on a decentralized network? Of course, as a regulator, we'll be scared who is governing whom. And that's a worry for us. So MAS view has been, let's figure out how to govern this system, keeping in mind there is a true potential, because T+3 problem has been there for 100 years, and we got to solve it. We can't avoid that. Now, to do that, you need a new form of money, and it cannot be crypto. It has to be something else. So let's look at our existing monetary system. We have M0, M1, M2. M0 cash can be digital currency as a bearer instrument. M1, bank's deposit, can be tokenized deposit, also digital currency. M2, maybe to some extent, we can argue, a well-regulated stable coin, a coin backed by assets which can be regulated and governed properly. Let's assume there are three forms of money now, a new form of money within the regulated system. Now that has to get embedded into this piece of software where the ownership is managed. And that runs on the DLT network. Augustine Carson of BIS made an argument last month in Singapore. Can the regulator consider a unified programmable ledger which means the regulators provide an infrastructure where the governance is run by the regulated body. Then you can write your smart contract, bank can provision this money, and you can run this T+T instant settlement. So there is this way forward. In fact, there are 3 projects which BIS does today. One is Project Mariana, Project Dunbar. Singapore started Project Guardian, talking about the regulatory framework for the DeFi protocols. So many regulators around the world have stepped up their activity to build a governance framework to allow this settlement to happen instantly. And to do that, at least regulators around the world have acknowledged that we need a new form of money. That is the biggest gift crypto gave to the industry. Now, coming back to her comment on the payment, when we connected Singapore to Thailand, our domestic payment network, the 3 clicks, 0 cost money transfer, before the connection, to send $100 to Thailand from a migrant worker's account, mostly illegal accounts, there's almost 15 to 20% charge on a bank transfer. After the connection, it became 3%. There's a dramatic drop of 10% cost save because regulators are willing to connect their payment system among each other. Guess what? Identical system in Thailand with identicals as in Singapore. It took us 3 years to connect. Systems are identical. Why? Because there's a policy misalignment. AML, KYC, sanction checking, all these processes. So we got to solve that for. Now the question, and I come back to CBDC question. After we connected, we are now roughly 3 to 4% the cost of sending money. The question we asked ourselves, why do we still have to pay 3 to 4%? Why can't it be less than 1%? And the answer to that lies wholesale CBDC. Because once you have wholesale CBDC, the interbank settlement becomes close to 0. Because you are dealing with a completely tokenized money between the banks, and that takes out the remaining 2%. So with wholesale CBDC, with retail CBDC, with tokenized deposit, we can get to T+0. We can reduce the cost of transfer to less than 1%. And with the better governance, new kind of asset class will come in, which is digital assets, which is a very different asset class, where you're taking ownership of an illiquid asset into a piece of token. It can act like a form of money, but regulators have to look at how that get governed better. So that made my little positive pitch on how regulators look at this whole space.
I already see Ms. Dorosh has put her microphone on.
Thank you, Renat. I just wanted to add, and it's amazing experience. And my only comment I was kind of having in my head is, why killing yourself over that when these transfers already exist on the cost of less 1% cross-border worldwide? They are there with us.
But I think that the challenge with Visa is still you have FX cost. You're still paying more.
Yeah.
So you can't avoid FX cost. And there's a cost of spending money for the banks. This is absolutely 0 cost. And I'm not going after Visa because large value must go through Visa. God bless you. But small value, $100 sending across for poor people, we need a state-backed market infrastructure. Small value. I'm not selling large value transactions. Visa, MasterCard should do it. And they should do it very well. So that's the distinction.
Yeah, and just to close maybe this topic is that...
we just opened it up.
Yeah, I'll probably close it by saying that we at Visa, in markets where crypto activity or CBDC activity is regulated and kind of allowed by regulation, we are very actively collaborating with central banks on seeing the opportunities for synergies. Because recognizing, obviously, all the benefits that CBDC can bring to the economy, we're looking together at the ways how we can, again, under the philosophy of our network of networks, ideology, how we can work together to bridge the benefits from both sides into one system that would be the most beneficial for the consumers. So we are doing that very actively.
Yeah, Mr. Turlov, I know you have in the group bank, right? So you would add to that discussion, but then can you please shift also to the question of what kind of maybe new products, ideas you're exploring in terms of using the blockchain technology, not necessarily crypto or like payments, etc., but some other areas, or any other products, services to the market, new ones that you think or your team is working on, please?
That's a really very good question, because now we completely sure that technology is progressing extremely fast. And can we make FX at almost no cost? Of course, yes, we can. Can we make it in payments instantly all over the world? Of course, yes, we can, or we already can. And that's not a big problem. If the cross-border compliance cost will become zero, the payment cost will become zero the same day. That's the only reason of slow and costly payment is compliance and nothing else. Remove compliance, everything become free instantly the same day.
That's a very controversial statement you're having there.
Of course, I understand that it's not possible.
It should not be that. It should not be that to start with. You cannot take compliance out of, or money laundering becomes a big part.
But there is no other chances to make it free. Its technology is not solving completely the function of monetary, of trying to make us like a financial police. So this process of compliance on each payment and currency controls, anti-money laundering controls, all of them increasing cost, and all of them is slowing down the payments. And sometimes the monetization could be different. We can make money on the transfers, we can make money on FX, but all this revenue is helping us finally to cover the cost for development and cover the cost for compliance. And compliance cost is higher than cost of development finally. Yes, I'm totally agree. When you're using your Visa debit card, any other debit card all over the world, all the payments is already instantly and already cost you not so much. It's much less than 1% in the total, even for the bank who issued the card, even for acquirers. I know that we're using many blockchain technologies. We're using, for example, the government database to register mortgages now. And government created, our Ministry of Digitalization created with the rest of ministries this blockchain ledgers to helps us to register mortgages, to register other form of collateral.
Smart contracts approach, right?
Yes, but to be honest, I still not clearly understand why do we really need blockchain to do that? Because even to register mortgages on a government database, I'm not even sure that we really need a blockchain. That it really creates some much value, because these settlement issues, T plus something, is being solved for anyway, and it's almost solved in centralized world also. So even the United States Security Exchange Commission adopted T+1, and it will become T+0 if necessary. The world is getting faster and faster, and it's not such easy to understand to me. Even researching this for many years, I'm still, to be honest, not fully understand all the great advantages of blockchain and how it can change all the world. So to be honest, it's not changing the world much. Technology itself is transforming world and payments and everything, and in money transfers getting faster, cheaper, and sooner, even without any kind of blockchain. I'm sure that blockchain could be useful in some ways. I'm sure that this evolution of paper money should happen in some ways, but that's this transformation of paper cash to kind of central bank digital currency is also not. I'm still not completely sure is it good or not, because it's raising so much challenges for the system itself, and To be honest, in my view, this CBDC theoretically can dramatically increase cost of payments and dramatically decrease stability of the system in some ways. Of course, I could be wrong, and I hope I will be wrong. But there is a lot of risk which is regulators all over the world is considering right now in their case studies. Because the central bank is actually starting to compete with its banking system. And that can create some imbalances which we should consider before we make
I see where
a
it goes,
launch.
yeah. Yeah, and we, of course, from the business, from Timur, from Mr. Turlov, right, I heard like deregulate wherever possible, like no compliance is the best, right? But however, development of apart from compliance, right, development of this fintech, new technologies raises the question of a cybersecurity, right? And we all said this is a data-driven industry. Personal data is very sensitive, right? So of course, I would like also the regulators, the government, a little bit comment on that, how we make sure that the data is protected. So Dr. Ndjimana, I mean, if you can talk about like in terms of developing fintech, but how do we look at from the risk and the data protection point of view?
Thank you. Before that, I have a message to participants, especially young innovators. In the digital space, Rwanda is a destination for proof of concept. We allow individuals and firms to come to Rwanda with their ideas. We offer an environment for testing the new solution, new ideas, and we allow them to support them to turn them into viable businesses. And in Rwanda, and also to expand to other countries. We have already some good successes in this area, and we welcome any, especially young innovators who would want to test their ideas. We have created an environment for that. Coming back to the discussion, I see, of course, there is a difference between regulators and business operators, but it is in our common interest that to ensure that the transactions are safe and also compliant with the standards, of course, with regard to anti-money laundering rules. But there are efforts to make on both sides. Regulators, with also new technologies, they are able to do the required due diligence. They have access to information. This can also lower the cost. And also on the operator side, they have to also, of course, to comply. Because the risks will affect the entire economy, governments, and also operators. So we need to work together to ensure that we comply, but also we try to reduce the cost. Thank you.
Thank you. And this is actually itself is an industry, right? RegTech, how we make sure that, so regulation has to be there. I mean, like this is no doubt. We're trying to create an even playing field, a safe place to do business, right? So but that also can be innovated. You don't have to do it in old-fashioned ways, right? And cybersecurity, as I mentioned, is becoming a huge topic and threat. Yes, Mr. Mahani.
So, you know, when we talk about AML, sanction checking, it is today left to the financial sector to fend for themselves, and that's raising the cost. I'll argue for a public good on RegTech, where a public infrastructure can do a common KYC checks, common AML checks, common sanction checks, not only domestic, cross-border. You've got to take out the cost structure out of the FIs so that they can become far more, they can focus on serving the customer with real product rather than indulging in this kind of things, which cannot be so, is costless and not that efficient. So in Asian market, many countries have started putting eKYC, public infrastructure, because, again, go back to my argument, to build a consistent high quality, trusted public good, you got to focus on the 4 foundational infrastructure: ID, data, moving money in a trusted way, and consent. Once you have that, you build very strong, trusted data around that. And that becomes a public utility to reduce all the cost structure, including some way a cyber protection. Now, I quickly go back to the 2 previous discussion. I think we've got to be very careful about payment. There are 2 kinds of payments. One is moving money from your account to somebody's account, and there's a merchant payments.
Yeah.
When it comes to merchant payment, largely institutional infrastructure, Visa, MasterCard, they all have to get it right, and they can do it instantly. You put a card, you pay it instantly, done. But when you're moving money from an account, the ownership shifts to individuals. And there's a need for a strong regulatory framework to protect from money laundering, terrorism financing. And we know these are not the issues you can just wish away for sake of simplicity. And we got to figure out how to make it happen. When you add this cost, this becomes where the cost structure goes all over the place. We have FX cost, cost of compliance, all this thing. I think my core argument for cybersecurity efficiency is that we all have to allocate capital for a digital public infrastructure. If there's the only way economy can take advantage of all the innovation happening around the world, and that can become a core next 5 to 10 years agenda. And I strongly recommend, if there's a public official in this room, go back to your country, encourage your ministers to spend money on public good, especially on financial sector.
Good point. Thank you. Yes, and Ms. Dor, I mean, you said you were the first, you can say one of the first fintechs, right? So you must be investing a lot into cybersecurity, right? So, and you have a lot of data about 4 billion, you said, people around the globe?
4 billion
about their
credentials,
spending habits, where
doing
they go.
transactions, 65,000 per second. So you
That's
can
a very
calculate.
attractive huge piece of information.
You can
right?
calculate how much data we have. And of course, it's not personal data in any way. It's anonymous, so we just have financial data. But on the security piece, well, it's, saying with the risk of saying obvious, the trust underpinning any system, indeed, but payment system most importantly, this trust is the foundational. Without it, nothing would happen. And we understand that, of course. So we've been focusing on security since we exist. And this is actually how we see ourselves in developing the payment technologies, because that's security by design. It's inherent security, because otherwise it just cannot operate. And for us, if you think, we've been really, really successful in eliminating fraud in physical world. Now, I can say that fraud on payment rails, like Visa payment rails in physical world, is actually not possible in a meaningful kind of fraudulent scale. You can do stuff in a lab eventually, but on scale, it's not possible, not possible anymore with the contactless technology, with a chip, so it's not. At the same time, of course, we understand this, these people who want to capitalize on fraud, they unfortunately have much more opportunities and technology at their hand to do it or to try to do it online. And this is where we see the highest risk right now in terms of the providing the necessary blocks to the attempts based on very high developed or advanced developed technology which is available, the same AI, right? Which is now enhancing the social engineering to the level which we haven't seen yet. Because the social engineering which was hunting people who were not aware, let's put it this way, who were not aware of that phenomenon, only those could be targeted. And now with the extreme reality of the, the false call you would get, implying your personal data, modifying your pictures from your social network using AI, that's dangerous. So understanding all that stuff, we are investing heavily in developing anti-fraud solutions, and we've started using AI and machine learning way many years ago. As a number, in the last 5 years, we've invested $9 billion in developing specifically AI and machine learning-based solutions, which are now at the forefront of helping our issuers and all the members of our ecosystem to monitor, assess, and successfully decline potentially fraudulent transactions, not letting them in the system at all. And we are very successful at that. So I can actually say that on the attacks, not implying social engineering, right? Because this is where, unfortunately, that's in person's hands, and this is not much we can do. But on the fraudulent attacks, not implying social engineering, we are very, very successful in helping our partners, our banks, to counterfront it.
Thank you, Ms. Dorish.
Thank you.
And yeah, the whole thing about AI, we could have another panel session and another hour discussing it. Yes, and some other interesting topics, right, in terms of innovation. But I would like to leave a little bit time for the audience to ask questions. I mean, if there are questions, if not, we can continue with discussing AI or comments. So if there are any questions, I think we have, yes, we have mic ready. Any comments, challenges to the speakers, please, the mic is here.
Speakers. Can you hear me? No,
yep.
Now it's on. Good morning, dear guests and our respected speakers. A lot was told about innovations, disruptive technologies, even regulation and compliance a bit. But keeping to the topic of today's panel, talking about the sustainability, how the sustainability considerations are incorporated in your innovation plans, and how those sustainability goals are considered in your development plans.
Excuse me, if I may, just like you introduce yourself. So.
Oh, I'm sorry. My name is Aygul Telkarayeva. I'm the president of the Institute of Chartered Compliance Professionals. So this is something that I'm really concerned about. Especially from Timur Turlov, this is something I'm really concerned about.
Anyone wants to go?
As a regulator, I can quickly intervene here. You know, when it comes to sustainable finance, there are three things regulator care: how to monitor, how to measure, and how to ensure that there's a real impact in terms of the SDG goals disclosure. In Singapore, in Asian market, I can only comment, most regulators have come together to focus on three things: taxonomy, market infrastructure per public good, which allows people to disclose and create matrices for reporting, and banks to monitor and measure their reporting to regulators. It's not mandated, but it is going to be soon mandated in some, hopefully very soon, where banks have to report. Now that has got a huge impact to the profitability of many things. So banks have to translate their existing asset to the sustainable finance, and there's a transition process going around. At this point of time, what we are solving for as a regulator is taxonomy, so that people have the same lingo all around the world. And second, allow small and medium businesses to able to disclose their sustainability information in the most elegant, simplified way, asking 10 questions. So that's what regulators are doing in Asian market. We have a long way to go. There's a project called Project Greenprint. You can go to MAS website and check out more details.
Thank you. Should we, anyone want to add, or should we move to next question? Any other questions? Dr. Riera, just wanted to ask you to comment. Dr. Riera is actually a person who stayed behind creating a financial center in Kazakhstan. He is now the chairman of the board of Astana International Financial Center Authority. He's actually been working in Kazakhstan on the idea of creating a financial center from 2005, you said, right? So creating Almaty Regional Financial Center, then AFC as a BCG partner. Please, yeah, and we've had a debate around the fintech, crypto yesterday, so please.
Oh, yes. Thank you very much, appreciate it. What I want to do is be a bit provocative between the two of you, just to the point and counterpoint of the central bank, digital central bank currency, and the counterpoint of how the banks manage that. Because you both express very different views and I'd like to see what is behind the reviews. How do you?
You want to go first? Maybe you. You know, as a regulator, we believe in choices. We don't believe in option A versus option B. We don't debate against A versus B. As a public official, we believe the market must have choices. And not every choice is answer to every problem. So the way we have approached this whole digital currency, and I think people should actually see for yourself what is happening in China and India. They actually deployed digital currency for retail customer. I'm also, while I'm a Singaporean, I also have roots to India. And I last year, this year, early part of this year, I actually went and have a retail CBDC. I can tell you it is a consumer delight. It is a consumer delight when I went to a small merchant in my hometown and I used my banking app, Reserve Bank of India system, where I could pay to the merchant retail CBDC instantly because it's a token money, it's a payment instrument, it's a bearer instrument. And they were happy for two reasons. They don't have to worry about robbery, and they don't have to worry about fraud notes, fake notes. So I think the CBDC use case to my mind is a context-driven and the circumstance. Large country with large population may require a form of money which can be better than cash. It can also have a use case for direct benefit transfer, which has a lot of corruption exposure, because when government gives DBTs, it can go through many systems and there could be leakages. Can the CBDC be used as a purpose-bound money for direct benefit transfer? So I would not argue CBDC as the answer to every problem, but I'll argue CBDC can be purpose-bound and can be designed for a particular purpose, which gives us it's a better opportunity to deliver the value than a normal account-based system. That would be my argument. On the blockchain, I agree that today, largely, big projects in blockchain have failed. You pick up any trade finance consortium, they all failed. But same time, there is a positive news. Due to evolving technology, I can't disclose the company. It's a Singapore-based company, you can guess. It has got approval from the US regulator to run all the FX settlement for one of the largest banks in the world. So there is this shift happening, and it's happening with good technology. With the combining blockchain with AI, other associated tool is not only blockchain. So I think the technologies are getting smarter. Regulators are also getting equally smarter because a lot of regulators have started hiring tech people to write code. Singapore is one of them. We actually publish open source code for technologists to question us when you think about this evolving technology, whether it's CBDC or all this DeFi protocols. So regulators also stepping up. It's a much better collaboration now. But I will not say that we have one answer which is the perfect answer.
Thank you very much. I think my key concern is that we definitely should understand the value of any new form of payments, any new form of money. Definitely, banking system become much more liquid and much more resilient. Maybe it's still not resilient enough, but now it's for anyway more resilient than before. Because when something bad happens, the money is still circulating in the same banking system. If we will create a direct competition of the central bank with commercial bank also in payments, that will create a competition also in form of in form of savings and in form of fast migration between the systems in terms of any liquidity crisis, credit crisis. So if something bad will happen, so we should expect that people may transfer money extremely fast out of system at all, not only from one bank to another, to keep money generally in the system, to let banks then finance each other, at least for some liquid assets. But if the banks will start to move money, customers will start to move money out of banks back to the central bank to reduce their exposure to any credit risk, that will create an issue because the banks will understand in that case that they should keep extremely more money as a free liquidity. And that will require them to pay much less interest to the customer and reduce any financing to the economics because of these risks. Or otherwise, to be able to get a much bigger credit facility from the central bank to cover this potential liquidity crisis, which happened to all this Silicon Valley Bank, First Republic, and all this, even US case. So that's the problem. On other hand side, I see that many cases which is now industry trying to solve by some different kind of tokenized securities is a problem of compliance rather than problem of technology. We should find a consensus what is allowed and what is not allowed, because all this crypto world is one rules arbitration process. So it's impossible to have anonymous account in a bank, but it's possible to keep your stable coin fully anonymous and nobody cares. That's a big, that's not advantage of technology itself. That's just a regulatory arbitrage. And we should make decision what is possible, what is impossible. What is the best for society, to allow this anonymous account or not to allow them. If the society will decide on that, so let's make the competition fair. Let's allow me to open an anonymous account, and I will also do great business on that. That's not a problem. And I always will be able to make an extra money and make all the other services cheaper, for example. We may using so the commercial bank money as this M1 form, of course, carries some special risk, which is M0 money not carry, the risk of financial institution itself. But if we will give a customer a choice not to carry this risk at all, that also will increase the cost for the customer at the end of the day, because the banks will reprice this risk. So if you're going to reduce your risk, you will have to pay for it, finally, unfortunately. And this is also the very, very, very teeny balance between all technologies. Of course, we should not make, we should be cautious in all this case. I understand that we have to, we surely should respect this new form and the transformation of cash. Cash should be transformed in some way. And this M0 currency should become not based on paper. So I agree that maybe this CBDC issue should happen for anyway.
I think,
Thank you. Yeah, if I may, just like it's interesting how this discussion about technology leads us actually to the discussion of what is the essence of banking, right, and nature of leverage, of actually going back to roots, basically. So thanks for stirring up this discussion. Thank you for the answers.
Governor, quickly, I think there's 2 quick points. I think singularity of money has to be preserved, whether it's a cash or whether it's a bank's money. I think every central bank must preserve the singularity of money. This is a very essential to the system.
Of the banking itself.
As a currency. What I'm making an argument here is that central banks will put the right regulation and the banks will remain the distribution channel. We need a new form of money for something else, not for the sake of a CBDC. And that's where the experiments has to be carried on.
Yeah, we can like discuss about the true nature of money, about it's being an asset, about the payment tool, and etc., etc. So again, this is a huge another area to talk about. So given that we are almost running, not almost, we have run out of time, and I think this was a great discussion. I mean, I appreciate contribution from every speaker, from the audience, and I guess this is. This panel shows the point that Astana International Forum is the platform to discuss, again, the issues, opportunities. So round of applause for our speakers, I would ask. Last, not related to the topic matter, but I know that I see a lot of the young people in the room, right? And then probably a lot will hear, and I mean, this is no doubt. For many of them, Mr. Trulov an inspiration. If like we came from the generation when we dreamed, at least I dreamed, I don't know about you, of becoming an inventor actually when I was a kid, to invent something cool, like, you know. But inventors of today, exactly these coders, startups, right? So what would be your piece of advice for the younger generation in terms of the entrepreneurship, about, like, you know, more high level about the entrepreneurship and being an inventor, about dreaming high, or any other advice? One single advice you'd give.
Be more focused on product and stop raising money, because to create something great, you really don't need money this time.
Thank you. Well, thank you for everyone. If I may invite our speakers for just a group photo in the middle, let's do that. Thank you again.